Starting. It didn't even do a countdown.
It didn't do a countdown.
Friends, we're here today with Claudia Turquez, All Western Mortgage. You guys know Claudia.
You know me.
We've done a couple of these videos before. I forgot to ask you. Is your next
Tuesday
appointment coming?
Nope, we're done.
Okay, we're good.
My next appointment is lunch at Lindo.
Lunch. Yeah. Ooh, Taco Tuesday.
Yes, when she was saying that she can understand Spanish or every fifth word of a Spanish, I'm like what? Like margarita, taco, tequila. That's what she understands.
And lindo Michoacan. I know that.
That's the universal words in Spanish.
What does lindo Michoacan mean?
Well, Michoacan is like a part of Mexico.
Oh.
Like a little city in Mexico. Okay. And lindo is beautiful.
Beautiful. Okay. Yeah. You're going up to that one on the mountain?
No, I'm going to the original one.
I love that one. That one's the best.
It's going to be good.
Okay. So we wanted to talk to you guys today about, so this is something that we run into all the time. And not all realtors and not all lenders are created equal. And not saying, I'm the best and I know everything, or Claudia is the best and knows everything. But she does. But it's a valid, when you are shopping for either a realtor or a lender, there are questions you should ask. And I think that it's, you should do your homework. And we had just got done chatting about some questions that we thought up front should be asked.
And think about it. Okay, so do you ask those questions when you go to buy a car? Yeah. I mean, most people take 3 to 4 hours, right, at a dealership when you're buying a new car, but they only spend maybe half an hour to 45 minutes with their lender to get pre-qualified. So isn't that crazy? It's like such the biggest purchase. Yeah. It's one of the largest purchases, and you're almost kind of trusting your realtor and your lender that they're going to guide you in the right direction, and hopefully you do end up choosing somebody that's good and trustworthy. But like Kristen said, not everybody's created equal, and so I think it's better for you to be prepared and equipped and educated to know what questions to ask for, maybe what red flags to look for, and then always get a second opinion. I always tell all my customers, and some of my realtors get upset because sometimes I'm not the best. Like I don't have the best rates or whatever, and so we end up losing the loan to Bank of America or something like that. But for me, it's like peace of mind for me to let my customer know, like, hey, this is what I'm offering you. Now go and compare. Yeah.
And I really prefer, sometimes clients will come to me and they have a lender already, which is fine. And I have a handful of realtors that I use based on certain needs of the client. And I would prefer to work with somebody that I know that can get the job done, because I know not all lenders are created equal. So, like I said, I prefer come to me first and I'll help you guide you to the professional that you need. But if you call Claudia first, that's okay too. So I wanted to start with one of the 5 questions when choosing a lender for your particular mortgage needs is, number 1, how many loan programs does your company have to choose from?
So we have a lot of loans to choose from. So our typical loans consist of FHA loans for first-time home buyers, and that's like a 3.5% down payment. That's what most people that are buying houses for the first time choose because the down payment is so low. It's 3.5%. We have conventional loans, which is also for first-time home buyers or people that are purchasing their second home or have already purchased a home in the past, and that's the 5% down program. We also have a conventional 3% down program that a lot of people don't know about, and it's a great program as long as you meet the criteria and the qualifications of Freddie Mac and Fannie Mae. And after that, we have jumbo loans. So jumbo loans is anything that it's considered like non-conforming because the FHA loan limit is $322,000. So if you go above that sales price, now you're going into a conventional loan. The conventional loan limit is about $484,000. So if it's anything higher than that, then you go into a jumbo loan, which we also offer. In addition to that, we have other loans that kind of start to get a little bit more detailed. So for example, we have loans for people that are self-employed that maybe generate a lot of income, but they write off most of their stuff. And so we have a bank statement loan. you know, that could be useful. We have so many different types of loans that basically it's kind of like ask us and then we'll kind of guide you and let you know what loans there are and what down payment assistant loans, VA loans. I mean, we kind of cover the whole gamut of loans.
So you do offer loans for tipped employees.
Yes, that is
like
correct.
Cocktail waitresses, bartenders,
especially here,
and or self-employed people.
That is
we
correct.
do have a lot of write-offs,
Yes,
so there
we
are
do.
loan programs for those types of people as well.
Yeah.
So Claudia and I tend to at times talk a lot of jargon. We're going to try to keep it real basic because we talk in points, we talk in percentages, and I know as a consumer, when I'm shopping for other things and people are talking in their jargon, it sometimes can be unclear. So great example of ask what type of programs the lender offers. Also, you do refi programs, correct?
Yes, we do.
Refinances on homes.
FHA or conventional. If you have an FHA loan and you've had it for a couple of years, your property's increased in value. In order to get rid of your mortgage insurance, which is a payment that's a monthly payment that's only for the benefit of the the mortgage company. It's it's refinancing out of an FHA into a conventional loan to get rid of that mortgage insurance, and so potentially you're talking about your payment could go down.
So let's talk about mortgage insurance for a sidebar for a quick second here. That has changed, right? Mortgage insurance has changed over the last few years of all FHA loans.
So it's changed for FHA. So prior to 2012, if you purchased an FHA loan or a conventional loan, typically it's 3.5% or 5%. As soon as you got 20% of equity into your mortgage or into your property value, you would be able to call up your mortgage company and say, hey, I think I have 20% of equity invested in my property. They would order an appraisal. You would pay for the appraisal, and then they'd come back and say, okay, yep, you have the 20%. We're dropping your mortgage insurance. Well, on FHA loans now, you cannot do that. On an FHA loan now, you'll have that mortgage insurance for the life of the loan unless you refinance out of an FHA loan into a conventional.
And you can refinance into a conventional loan. You still need that 20%?
That's correct, yes.
So you can even call
to get rid of the mortgage
insurance. So you still need equity in the property to get into the conventional, but to get a conventional loan, you also need higher FICO scores, correct?
You do, well, for a better interest rate. The FICO score requirement on both loans is a 620 minimum FICO score. That's the requirement.
Okay.
But that's going to dictate what type of interest rate you're getting.
There's so many moving parts in loans, guys, and that's why when you say, "Hey, Bobby down at the shop got this percent interest rate. How come mine is this?" There are so many moving parts in a loan. Debt to income ratios, income, FICO scores that go into the machine of computing what you actually are going to get and what your payment's going to be and what your interest rate's going to be. That's correct. Just keep that in mind. Anything else on that first question to add?
On the first one.
The first question of what kind of loan programs before we move on to the next?
No.
Okay. All right. The second one that I thought was really important up front, because I've worked with lenders and I know you can get a loan done 21 to 30 days, worst case scenario. Maybe a little bit longer on VA because of VA holds you up. But to take 6 to 8 weeks to get a loan done, it's happened before, not with Claudia. But this is a question that I would ask up front when you're shopping for a lender. This is it, setting expectations. What can I expect from start to close on a timeline? How many days?
Correct.
Let's set that expectation up front. Of course, there's always stuff that comes up, but let's set an expectation so we know where we're going.
And the expectation is typically set by the real estate agent, because when you sign a purchase agreement, typically it's a 30-day escrow. And so I think the cardinal sin for a realtor is for a lender to call and say, hey, I'm going to need an extension on this contract.
I will cut you.
Just because there are contingencies in there, right?
Absolutely.
So you have loan contingency, loan approval contingency, appraisal contingencies, your due diligence periods. And so for us, we treat that as it's a binding contract between the buyer and the seller, and there's money at stake, and there's a property at stake, and there's, depending on whether the seller is trying to sell this house to purchase another one, it could be a domino effect. Like if I don't do my job, I can affect the lives of the borrower, the seller, the realtors, everybody. And so that's, for me, I take my job very, very seriously. But typically the standard timeline is less than 30 days for us. We try to be done a week before we're going to close so that we're not scrambling at the end.
Yeah, and I think this is another reason I love working with a lender that I know and trust, is because I already know before I write the contract what Claudia needs on her end, because her and her team have a lot of stuff to do between, well, first of all, we do a lot of it up front before we ever even write the contract. Yeah. Then once we get into contract, there's a lot of things, one thing that needs to happen after another that her and her team need to do. And allowing them enough time, I always like to under
promise and over deliver.
That under promise and over deliver. I rather tell you 30 days and we get it done in 21. Yep. But I already know that, and Claudia and I are constantly in communication about, okay, where are we at? What are we doing? And on behind the scenes. That's just another reason I like to use a lender.
Well, I think that's kind of going into the next question of how often or how involved are you going to get, keep me informed, right? Like the communication between back and forth. So for us, it's very important for us to communicate with that borrower. Most of the time we're talking about a first-time home buyer that's purchasing a property for the first time. And so the last thing I want to do is leave them in the dark, right? Yes. And just say, okay, I'll call you when it closes. That's not typically how it works. But a weekly, so for us, what we do is we do a weekly update to all of the real estate agents involved in the transaction. So both realtors and then also our borrower, letting them know every time we reach a milestone. So, hey, we're going to charge your credit card for the appraisal. It's going to be $450 so that they know that, hey, if you see a charge, this is where it's coming from. And then once their loan is submitted to processing, once it's submitted to underwriting, once the appraisal comes back, we send them what the value of the appraisal was. Once we get loan approval, so every step of the way, I go to 99% of my signings. If I'm not in a signing, it's either because I wasn't able to move something around or I'm out of town.
Which is unusual. Not all lenders do that. And I really appreciate that about Claudia, because especially when we get to the day of closing, if there's any questions
it's going to be on the loan documents.
On any of this 10,000 pages that a buyer's signing, it's going to be regarding the financing.
Right, that is correct.
And having her there is just, the customer feels cared about. I can answer the question. I can get Claudia on the phone to answer the question if she's not there. But when the buyer has their team there, I believe they really feel cared about. But that was the next question, is ask, how can I expect to be communicated with? Is that text? Is that email? And how often? Right. Are you going to call me? Are you going to send a messenger pigeon? What are we talking about? And make an agreement. If you think that the best way, I do most everything text or email, but if the best way for you is a phone call, you say that. I prefer to be communicated with a phone call, and that's how we'll communicate with you.
Again, going back to, it's one of the biggest purchases of your life. And, you might be the borrower who says, this is where I'm staying for, from what I believe to be, the rest of my life, or 10, 15 years. So for you to not know where you are in the process of everything, or for your loan officer or your real estate agent to pick up the phone and call you and say, hey, this is where we're at now. I think that's totally irresponsible of us. We make really good money taking care of you. And so it's our job.
Yeah. And I love that about our partnership, is that we'll text each other early in the morning, late at night, and just touch base throughout the whole process, and being able to communicate to the client of where we are. America, we care because people matter. That's so true.
Owls.
I don't know what white owls.
I don't know what white owls is either.
But people do matter, and this is one of the biggest financial investments people ever make, and it's important to have a good team. So set expectations and make agreements about how we're being communicated with and how often.
Got it.
Messenger, white owl messenger.
I don't know. Anyway.
Okay.
So the cost.
What
right?
upfront cost what upfront cost can a buyer expect to have to pay out of pocket?
Okay, so for our purposes, for the purposes of the loan side, the appraisal. So here's what happens typically. You go look at houses, you fall in love with somebody, you make an offer and it gets accepted. Kristen sends me the contract. Kristen's going to probably do a property inspection, a home inspection right away, right, within your 10th. Mm-hmm. And then what we're going to do is we're going to prepare disclosures for you. And once your disclosures are signed, the first thing that I'm going to tell you is say, I'm going to need a credit card because we need to order the appraisal. That's the most important thing for us because obviously we cannot give somebody a loan for more than what a property is worth. So that's the only upfront cost that that you can expect from a loan officer's perspective or a lender to pay for up front, just the appraisal. And then obviously your earnest
home
money
inspection
deposit
and
as well,
earnest
right?
money, yeah.
The EMD.
So there are upfront costs. There is money out of your pocket that it does. So whenever I have a client call and say, well, there's down payment assistance programs, they think that covers everything.
No, it does not at all.
I always tell them, save your money.
Yeah. That's a different segment though, right?
Yeah, that's a different segment. But yes, there are solutions around down payment, but you still have appraisals, inspections. Earnest money is typically anywhere between a couple thousand to 10,000, depending on the price of your home that you're buying.
So that's up front, and then everything else gets paid at close of escrow. And so a lot of people think, okay, when do I have to give the rest of my money? Always at the end when you're signing at title. So, excuse me, a general rule of thumb is that depending on what your sales price is of your property, 2.5% of the sales price is a good number to kind of, like have in the back of your mind of what your closing costs are going to cover. So depending on whether you're doing an FHA loan with 3.5% of the sales price or a conventional loan with 5% of the sales price, it's going to be your down payment plus your closing costs.
Yeah, which are separate. Those are two separate things.
Correct. And so you'll need, so let's hypothetically say that your down payment and your closing costs combined is $15,000. They asked for a $5,000 earnest money deposit, so your cash to close is going to be $10,000. That $10,000 you'll need to do at the very end at close of escrow. You'll have to wire it to the title company when we're signing.
And all of that obviously is once we get into the loan process. But the reason I put this question up front is how much money out of my pocket up front is because a lot of times we'll get into the loan process and people either sometimes it takes 2 or 3 times to hear something before people understand, especially with so many moving parts in a real estate transaction. So if you're told up front, you hear it from me, then you hear it again once we get a loan contract from Claudia, it'll start to register. Yeah. And not that, and hear me, this is out of respect. It's not that people are telling you. It's a telemarketer. Yeah. It's just that when you're dealing with something that you're unfamiliar with, it can take 2-3 times for it to click, for it to stick. So I think that's important. This is a great one. How much do you charge, Claudia? And can I see a breakdown of all my costs from before I make a decision on who I'm going to hire?
Right. Yes. And the answer is yes. And actually, you should. When you go and get pre-qualified with any lender, whether that be your bank, a mortgage loan officer, what happens is we do what's called a pre-qualification. So you come in, you bring me your paperwork, I run credit, and I tell you, congratulations, Miss Griffin, you're pre-qualified for $250,000. And so we have a breakdown. It's called a loan estimate where it's going to have all of our fees. So our fees, we don't charge an origination fee. All we charge is a processing fee and an underwriting fee. So it's a $595 processing fee and an $895 underwriting fee.
That's the same amount for no matter if you buy $100,000 house
if it's
to
$50,000, which is
$1 million.
Exactly. It's going to be the same no matter what.
Is that typical for most lenders?
I think within a couple $100.
But it's the same amount no matter how much of a house you buy?
Yes, okay. I believe so. The origination and not the origination. The processing and underwriting is typical. We're at $895. Somebody might be at, $995 or whatever.
It used to be different in the old days in the craziness of the boom before the crash. Lenders did different things in regards to those charges. So it's been regulated a lot.
That is correct.
And there are There are regulations now.
There are. So, so the loan estimate will say, okay, so here's our lender. These are the costs that the lender is going to charge you or may charge you. Then it'll be your estimated title and escrow charges, and then you'll have like your prepaids, like you'll have your recording fee, and that'll be an estimate as well. And then it'll be your prepaid. So what are you gonna, an estimate of what your homeowner's insurance might be based on the sales price, what the taxes are going to be. And so everything is spelled out for you. It'll have your interest rate. It'll have your monthly mortgage payment with principal, interest, taxes, and insurance. So that loan estimate basically gives you an idea of what you're getting yourself into. And it has that. I was talking to Kristen before we started filming that what I've seen lately in this week, just in this week alone, I've seen it 3 times, is somebody will call me and say, okay, well, so-and-so is offering me, let's just hypothetically say, 4.5%. And so because I know based on their FICO score, my rate is, 4.75, I'm like, okay, that's interesting. That doesn't mean that I'm the lowest on everything. I'm not. So what I typically ask them for is, did you receive a loan estimate from your bank? And they say, no, but let me get it. Once I get it and I see an origination fee, then I explain to them that, okay, you see that loan origination fee? That loan origination fee, in addition to the underwriting and the processing fee, means that they're using that origination fee to buy down your rate. So
that's why the interest rate's lower.
If I use that amount, I'm actually at a lower interest rate than the interest rate that they're giving you. Or sometimes I'm not, I'm not saying it's every time, but it has happened to me 3 times this week where the customer is being told, I'm giving you 4.5% or I'm giving you 4.6, but they're not being disclosed that the reason why that person is getting that is because they're using a 1% origination fee to buy down the rate.
And that fee could be a couple grand, let's just say, right, and it gets rolled into the loan. It's not illegal to do that, but
at all.
It is the reason that sometimes loan estimates can look different. So whenever you're comparing apples to apples, get a loan estimate. Right. Make sure if you're shopping the loan, make sure you take that to the next lender and say, okay, this is what I want, and you get to compare both to each other. Now, when you're buying a house too, that loan estimate can vary. You buy a house with a homeowners association, and maybe you didn't consider that on the loan estimate. Right, exactly. So that could change. There's some additional fees.
Well, that's what's called an estimate, right? Yes. And so that you could see it just gives you a rough idea of what to expect. Like she was saying at the very end, like, okay, what's my cash close? Do I have that money? Can I save up that money, right? Or is this out of my price range?
Do you give this to every client? Do you give every client a loan estimate?
Yes. When they're here and they've given me all of their information and I send a prequal to my customer, then at that point I'm sending a loan estimate to the customer.
So that's what you need to ask for, a loan estimate. All right, so awesome. Communication, how do you charge the fees? Yeah, that's all the questions that those are the upfront questions that when you're hiring a lender, because that's the topic today, start with these questions. Yeah. And they're going to ask you to get you pre-qualified. They're going to want to see all the...
So that's another thing, right? And you as a consumer won't see it, but I think realtors see this pretty often. I will not issue a pre-qual letter for a real estate agent to go and show houses for somebody if I haven't received asset and income documents and I've verified them and I've ran credit. It's very important because I feel like what good is a pre-qualification letter to her if I haven't verified the information that the customer is giving me over the phone?
Well, let's talk about that.
We can get into problems, down the line.
There's a pre-qual, which just has a conversation over the phone. Hey, what do you make? And there's a pre-approval. I don't take anybody out to look at houses until we're pre-approved. And that's something that I told Claudia, that's how I operate too, and that's how she operates. That's why we work good as a team, because sometimes it takes a while to get people pre-approved because of whatever situation. Right. But we work with them to get them down the road, to get them pre-approved. Once that she's received all required documentation, that's when she issues a pre-approval.
And think about it. The last thing you want to do is, not that it's a waste of time, but yes, go out and show people houses when they necessarily might not qualify. And second of all, now you have a borrower that's super excited about something, right? And they might not qualify.
Oh, I don't want your heart in it and you fall in love with the house, because it's, investors, if the numbers work, the numbers work. Yeah. They don't even care about the house. But most first-time home buyers or any home buyer, if you're going to live in the home, it's an emotional purchase.
Yeah, it is.
And you know, you fall in love with the house, you finally find your dream home, and then you don't even know if you can afford it.
Well, you pay your deposit, and then you're into it a week or 2 weeks, or you finally get documents from the borrower, and it's like, oh, I didn't know you had $15,000. I don't, but I can't speak for anybody else.
I can't.
But if I'm asking you for stuff, or if you're saying I really need to go see this house, and Kristen's saying you need to get a pre-approval, this is the reason why. It's not because we're trying to be mean or because, you know, we're discriminating. It's just because we're doing our due diligence on our end, and we're being thorough with, listen, I want you to be ready, and I want to make sure that you qualify for this price point before you go hop in a car with Kristen to go look at houses, and even more so before you actually make an offer, and now you have to deposit money, right? Because now that, you know, getting again too much into it, but depending on the contingency periods, you can lose that earnest money deposit if your loan officer didn't do the right thing at the beginning and qualify you right. The seller can keep that money from you.
Yeah,
they can at least try to keep it.
Well, in our market too, in Las Vegas, you know, it's a competitive market, and in between those two scenarios that she just talked about, there's an offer submission process, and the seller's gonna compare. If you don't have an approval with your offer, he's gonna go on to the next.
That's right.
And so that's another reason that it's important to do it up front. But when you're shopping for your team, for your realtor, for your lender, there are important questions to ask up front, and again, get a second opinion.
Yeah.
We work well together, and I love Claudia. She gets it done. She's helped me through a number of transactions, even when...
And we've prepared people for like a year, you know. That's another thing is, like, to us, again, yes, people matter to us, and I don't look at people as, oh, my next commission check. It's kind of like, okay, you know what? You don't qualify now, but let's work on getting you where you need to be so you could purchase a home. And that might be 3 months down the line. It could be 6 months down the line, or we might be looking at a year.
Yeah.
A year goes by so quickly.
It does,
it goes
especially
by so
when you're working on
fast.
credit.
Yes, it goes by really fast. And so we will help you work on your credit. We take the time to educate you, to tell you, hey, listen, my credit simulator is telling me that we can get you to a 740 if you do this, this, and this. And so we take the time to do that kind of stuff. We don't just say, "Oh, sorry, you don't qualify." Next, you know, that's not us.
I shared with you last time, I think, about my credit. So I closed a credit card,
and it went down.
My
right?
credit score went down 40 points. I haven't done anything. That was 30 days ago. I have LifeLock, so I every month get an update. My credit score went up 38 points. I haven't done anything. So I thought that was interesting. It gets dinged immediately
and it goes back up.
But it went back up.
The way that they calculate credit in the credit system for the 3 bureaus is really interesting. I don't think anybody really understands it. I don't even think me as a loan officer understands it.
Sometimes
I have a booklet that I kind of referred to, you know, where it talks about this is how they derive or they come up with your FICO scores. But to me, the interesting part is, okay, so there's TransUnion, Experian, and Equifax, and all 3 of them are set. Like, they're all different scores.
They all have their
They're not all
own
the same. So
thing they do.
It's very interesting. Some not consumers, but like, for example, I might have a Target credit card that only gets reported to TransUnion and Equifax. So as a result of that, my TransUnion and Equifax scores might be higher than my TransUnion, or what did I say? Experian and Equifax. My TransUnion, or I may have a collection, right, that only Equifax is reporting. So the Equifax is super low, but then TransUnion and Experian are super high. So now with Credit Karma and all those things, now your credit card is like, oh, check out your FICO score. Those are, again, it's almost like a loan estimate, right? It kind of gives you a good idea, but they're not accurate, like to the T. So it's always good to talk to.
Was it you that mentioned that Credit Karma or one of those services do not report delinquents?
They don't take into consideration, I believe, yes.
Collections or
Correct.
something.
And they also only report on 2 bureaus, always.
So, and when you get your credit pulled by a lender, they're going to pull all 3 and they're going to take the middle score. So just keep in mind, and those scores can vary, they 100 points at times.
Like, that's why it's interesting, you know, that all 3 of them are not the same. And I've seen credit reports over and over again where I might be in the 700s with 2 of them and in the 600s with 1.
Yeah,
So,
and you know, but we'll work with that. So choose your team wisely.
Yes.
If you guys have any questions, contact us. It's important. Not all lenders are created equal, and not saying again that Claudia knows it all or I know it all. Just do your due diligence, like she had mentioned in the beginning. People will research their shoe insoles more than their mortgage, what they're getting into. And so, if we can direct you in any way, I hope this video.
And ask questions. Don't take my word for it or her word for it. You know,
and reach out. Ask us questions, even if you're not in our market. Reach out to us. We're happy to answer anything that you, Dr. Scholes. Dr. Scholes probably is pretty good, but no, people do a lot of research on the do there on like the fungus on their nail versus seriously. Like their.
It's true. It's true. I just think a lot of people just are very trustworthy, and they say, okay, well, you know, I don't know anything about loans. I don't know anything about real estate. So go ahead, but no, ask questions. Definitely ask questions.
And no question is a dumb question. So, my friends, thank you. Have an awesome day. Reach out to us if you have any questions.
Yes.
Take care.
Have a good day.